Right, folks, welcome back to the channel. This is the daily time frame of euro dollar, and I'm going to be going over something that was requested by somebody in one of my one-to-one sessions. And it's the concept of mastering the daily time frame, because the daily time frame gives us a bias that's incredibly important. We will go down to the 4 hour time frame as well and discuss how you can get involved in that as well. But this video is all about primarily dissecting the daily time frame and the things that the daily time frame gives us, because it's an incredibly powerful time frame if you utilize it to its maximum. So just before we go in the video, just want to announce that we are offering an Easter sale. You've seen this in quite a lot of our videos. It is a 30% off, and this is something that will give you access to myself 7 days a week to answer questions, free one-to-one sessions, free case studies, free tutorials on how to trade, simplified ICT entry models, and SMC hacks as well. All of this is for, at the moment, we're offering £50 and £60 depending on which package you get, and you get 30% off both packages. So this is your opportunity to take your ICT understanding and your overall trading to the absolute next level. So that, with that being said, let's get involved in the chart. So what we have over here is we have euro dollar. Right now, we need to understand when it comes to the daily time frame, there's three things that I'm depicting when it comes to understanding how we trade. Right, there's three things we depict on the daily time frame, and these are the following. The first thing we want to look at is we want to look at structure, right? We want to look at highs and lows. So I've made a lot of videos where I dissect structure in almost every single video in on every single time frame. And the reason for that is simply because the markets are fractal. So what you see on the daily time frame, you see on the 4 hour time frame, the 1 hour time frame, the 15-minute time frame, the 5 minute time frame, the 1 minute time frame, and so on. These concepts will apply to every single particular time frame, but we're here on the daily time frame in this video. The second thing we want to look at is we want to look at where the fair value gaps occur. And the third thing we want to look at is where we are priced, right? So we're going to be looking at pricing. So pricing, for those who don't know, represents what we call premium and discount, or PD arrays for short, right? PD arrays. So this is very important, right? So I'm going to be giving you a very holistic overview of euro dollar over the last, I think, 1 to 2 years, depending on where this data goes back, since 2022, right? So let's jump into the charts, right? So we start here in December 2021 going into 2022. So what we look for, if you looked at my previous video, which I highly recommend checking out on structure, when we look at structure, structure is something that everyone learns at the beginning of your journey, but the importance of it, I cannot stress enough. The importance of structure is something I cannot emphasize enough. So what we're looking for in a downtrend is simply looking for new lows and higher lows and new lows and higher lows. So we're looking for a pattern very similar to what I've drawn out over here. So how do we do that? What you're looking for now, right, is you're looking for sharp moves up and sharp moves down. So if we look at how I analyze my euro dollar time frame, right, I'm going to start by mapping out structure just over here, right? So this dot over here, if I label that black, this black dot over here represents a structural low. Now from here, what do we do from here, right? This is how I mark out my euro dollar structure, right? So we have a structural high, structural low, structural high, structural low, structural high. Now I'm going to stop here for 1 second, right? A lot of people might ask me, oh, liquid FX, why didn't you do this, right? Why didn't you mark out structure like this? Why didn't you consider this to be a low, and this to be a high, and this to be a low, and this to be a high? Well, intrinsically, there's nothing actually wrong with marking out structure like this, because overall, you still are going to be looking for sells in this bearish climate going down this way. But to answer the question, right, why didn't I mark out structure this way? Why have I marked out structure this way? Now, the reason for that is because you need to use your concepts in conjunction with each other, right? If I mark out a high over here, right, so this then becomes a low, and now this then becomes a high, there's a very good chance, and Price did do this, this is not necessarily hindsight, this is just how I mark out structure on all the time frames. What we have here is we have Price giving a fair value gap over here, right? So when we have a low, sorry, when we have a high over here and we have a fair value gap just above, this is one of the SMC hacks, right? So we call this, I'm sure some people know that I'm sure some people know what this is called, but this over here is what a lot of people refer to as inducement over here, right? This is a high, right? This is a high that is just above liquidity, sorry, just above a fair value gap, right? So from here, when you have, if I bring your attention to the side, when you have a fair value gap or a POI just like this, and you see price behaving in this way, where what you see is you see price delivering a high up here before heading down, this here often is inducement, right? So this now becomes our POI. This is inducement. So this is essentially liquidity dropped. just above a POI. And we as traders need to understand that intrinsically that price moves from liquidity pool, sweeping liquidity, sorry, and rebalancing inefficiencies before heading lower. This is the nature of how markets move. It seeks liquidity and fair value gaps, right? That is an ICT concept, and we apply it with these basics of SMC. So we apply it with structural mapping, right? So going back to where we were, just to clarify where we were, this is not high, this is not a low. Another thing I want to bring to your attention that is that on the daily time frame, we want to see a decent number of pips as a pullback. Notice how I'm using the word decent because I don't want to give you an exact number because people can get really picky with their entries and exits. I don't want that because trading does have an art form and there is a form of discretion that you need to use. And this is where discretion comes in, right? So to mark out my structure, right, I had a structural high all the way up here, and this is my low, not anything here or anything here, right? This is now my high. What makes this an effective high? What makes this an effective high is the fact that we have significantly more than two candles for the pullback. We've seen price mitigate a fair value gap prices left, and we see price moving lower after giving a sharp move up, then we see a sharp move down. And now if we continue on with the trend with the markets overall, what we have here now is a swing low down here. So this is a new higher low, right? Just like this, a new higher low. Now from here we see a swing high just like this. We see a swing low, we see a swing high, and we see the low all the way down here in September 2022. So from here, those who were trading the market back in this time, which is something I was definitely doing, from here, of course, the climate was bearish, right? So what we see over here is we understand from a structural perspective, price is heading lower because we see price giving us very clear breaks of structure, right? So we see a break of structure over here, we see price breaking structure over here, we see price breaking structure over here. So we see all these structural breaks and we see one more structural break over here, right? So this is the first thing you want to understand when it comes to structure. The second thing you want to look at is you want to look at which fair value gaps are being filled, right? Which inefficiencies are being filled. And we can go all the way back up to here, right? So if we zoom into the time frames, if we zoom into the chart, what we're looking at is we're seeing a fair value gap that gets filled over here. Bearish fair value gaps are respected. Again, bearish fair value gaps are respected. Again, over here we have a bearish fair value gap that gets filled, right? And we have another bearish fair value gap over here that gets filled. So we have all these bearish inefficiencies that get filled over here, right? Now, this is an SMC concept that I'm going to introduce to you on the daily time frame, and it's incredibly powerful, sorry. So we've been through the idea of structural mapping, we've been through the idea of inefficiencies. What we're looking at now is the concept of a supply to demand flip zone, right? So we understand intrinsically what a supply zone is. A supply zone can be looked at a bearish POI. So what do I mean by a flip zone, right? So what we see over here is when we see price heading down, right, we're going to see price respecting some sort of a supply zone, right? So we're going to see price fill a fair value gap over here. Let's label that in gray. So we see price respecting this supply zone over here, right? Now, price then creates another supply zone just over here. So what we see, the secret to understanding a supply zone is that there must be a reaction, right? So you can't expect price to essentially break it like this. There must be a reaction at some point because typically what this could mean from a liquidity standpoint is price could literally be heading higher, sweeping this liquidity over here and just heading lower. So how do we know it's a higher probability supply to demand flip zone? And how we do it is we need to see this exact movement. We need to see this exact price action behavior. We see price head up to the zone. We want to see price come into the zone, not break it, come into the zone, react off, give a reaction, and fail. So what this represents is it does represent a interaction between buyers and sellers, right? So we understand sellers are trying to push that price down, but buyers have ultimately taken over. So what we see here is we see a very clear supply to demand flip zone. And now this becomes our demand zone. So what we look for is we look for price to come down to this zone before heading higher. And this is what we see here in price, right? So this happened back in 2022, towards the end of 2022. We had a supply zone just over here. So we had that bearish POI, as I've stated earlier. So what we had over here is we had a bearish POI just like this, right? This is our bearish POI. Notice how it left a fair value gap, right? So what we see over here is we see price giving us a reaction. So we see price giving us a reaction, trying to break this low over here before failing. And now what's happened is we had a new fair value gap, a new POI over here, right? That's held. So this here represents the shift in supply to demand, right? Supply has failed, demand has taken over. And this is one of the most incredibly powerful concepts you can use on the daily time frame to see longer term days, if not weeks, shifting using this simple schematic over here to the left, sorry, to the right of your screen. Now from here, if we look at the euro dollar time frame, we've had a bullish shift of structure since then. So what we saw is we saw price giving us bullish shifts of structure. What do we mean by this? We see price giving us a low, followed by a high up here. We see a low, high, low, and we see a high all the way up here. So we see a high all the way in this region over here, right? This is the current high we're dealing with, right? Just over here. Now from here, we see price giving us that break of structure to the downside over here. So price does deliver that break of structure over here, boss. So this is very recent price action. So this is currently how I'm looking at the euro dollar time frame on the daily time frame from a daily perspective, right? So from here we have another swing high up here, and we have a new swing low down here. Notice how the same principles have been used for a bullish market as the bearish market, right? Couple of things to look out for if you're an ICT trader or an SMC trader. We understand now bullish fair value gaps are being respected in line with bullish breaks of structure. So what we see here is we see a fair value gap here that was respected. If I label the fair value gap back in blue, we see this bullish fair value gap getting respected. We see this bullish fair value gap getting respected, and we see this bullish fair value gap getting respected as well. So we see these bullish fair value gaps getting respected. Up until here, we saw the break of structure. So from here now, current live price action on Eurodollar prior to CPI. This is prior to CPI on the 10th of April, right? Recording on the 9th of April. We have a swing high up here, and we have a swing low all the way down here. So what you need to understand, right, from a pricing perspective is that we're currently right at the equilibrium over here, right? We're currently at this EQ level over here. So what we need to understand is that price here could be very erratic. And the reason why it could be very rangy, very erratic is simply because we're at this EQ. Look at how prices behaved at the EQ. We're just hovering, right? We're just hovering. So from here, in my opinion, I think that CPI for April will determine the overall direction of definitely the week, if not the month ahead, right? So with that being said, this is the current daily outlooks for Eurodollar. A couple of things to point in mind now from a liquidity standpoint, right? Looking at it from a liquidity standpoint, if I really zoom into the charts, zoom into the markets, what we have here is we have a weak high up here. This here is a weak high. Now, the reason why this is a weak high is because this high, if we look carefully, if we analyze price carefully, we haven't seen this high really make a new low, right? This low has been made, and since then we pushed up once, and now we pushed up twice. This is a weak low all the way down here. This low here is also ill-established, right? It hasn't actually produced anything of significance. So we're dealing now between two weak structures, right? We understand from a liquidity standpoint, weak structures have liquidity above them. Hence why we call them the DOL, or the drawn liquidity, for this very reason, right? We understand that this is a drawn liquidity. If I bring this to the right, and we understand that this here is also a DOL, or a drawn liquidity, right? So we could see price giving us two potential scenarios. We could attack either buy side liquidity, or we could attack sell side liquidity. Now, how do you decide whether price is going to attack buy side or sell side liquidity? Well, the answer is you need to understand where price is heading on the lower time frames, the intraday time frames, which is something we're not going to get into this video, right? Because this video aims to dissect the higher time frames, specifically, sorry, the daily time frame, right? Using all the concepts I've been through today on the charts, right? So you can apply these to any market you want, whether it's an indices market, whether it's commodities, whether it's another forex pair, even crypto. This works very well on Bitcoin and Ethereum, just to name two markets off the top of my head, right? So if you like this video, give it a like and thumbs up. Remember, we are offering 30% off all Liquid FX packages. So if this is something that interests you and you're interested, feel free to message me on Twitter or Instagram, and I'll be more than happy to help you out.